Tax planning mistake number 5 the business owners make is they failure to maximize their business expenses for their automobiles. Should they use the actual expenses or the per mileage rate, and their travel expenses, should they use the actual per diem rates for their travel expenses? Because when you travel out of town, and also your home office deduction. I don't fear a home office deduction. They actually have a new rule, safe harbor, $5 a square foot for your home office. But it's got to be your principal place of conducting your business and where you have business activity. So if you have an office, sometimes it's very difficult to claim a home office. If you're an S corporation, you can't have a home office deduction and rent to your S corporation. You can't rent the home office to your corporation. So what's really important, let's start with the car, is you keep a log. Now, one method would be keep it every day. They do allow you to take a sample if your mileage in your car is, you have a pattern, depending on the nature of your business, it's not seasonal. You can take 3 months out of the year randomly, and those months can be used then to create, how many business miles, how many personal miles, and whatever that percentage is. Then you always got to keep your records for your oil changes, and that's how they verify your mileage. They want to see your repair bills in January and December, and that can tell you how many miles the car has driven during the year. And so that's what you try to do with your car expenses. And you have to document that, and then that percentage that you come up with is the percentage you apply to your total miles that you drive. So if I drive the car 80% of the time during my random months for business, then 80% of the whole year is business. So if you have 20,000 miles and 80%, you deduct 16,000 miles at 54 cents a mile. That's a big deduction. Okay? So that's really important as far as the automobile. What I can say, though, is if you have low miles, so somebody might be in business, they really don't drive the car, and typically if you have a business car like that and you have low miles in your business, you want to have a personal vehicle used for the personal, and you have the nice car you use for the business, and you can use the actual expense method. That'll be a greater deduction if your miles are low, under 10,000 miles a year. Then you would use the actual expense method. You can't flip every year. Each car, once you start, you got to use it for that car. But if you're driving low miles, then you want to consider using the actual expense method. You'll be maximizing your deductions, is what I'm saying. Okay? Now, for travel expenses, I think one thing that's important for business owners, that your lodging, you have to have receipts for your lodging. You're not allowed to use the per diem allowance if you're a business owner. So you have to show actual receipts in order to take the deduction for your lodging. But the airfare, as well as the meals and incidental expenses, there's per diem allowances that are allowable. They have big city rates, and it depends on where you're traveling. So if you want to use the per diem rates, you're allowed to do that, but not the hotels. And they have a separate per diem rate for meals and incidentals. And then for employees and other people that are traveling for your business that are not owners, they can use the per diem rate for their reimbursement too, for lodging. That is an effective way, if you have sales force that are traveling out of town overnight, to compensate them tax-free. When you think about it, that you want to try to encourage them to be frugal and everything else, but you want to make sure that reimbursement is tax-free, okay, to them for their. And sometimes the per diem amount, if they want to eat at McDonald's and stay at the Hotel 6 or whatever, they can make money off of it, tax-free. Okay, you're allowed to give them the per diem allowance, and that's the way of getting them tax-free income. Any questions on the travel, home office? Home office is $5 a square foot up to 300 square foot, so that's a $1,500 deduction. If you are self-employed and have a home office and you operate your business out of your home, that means that every mile you drive is business. So that's important, because that if you are a business owner and you have an office, the first trip and last trip of the day are personal when you do your mileage records. But if you are a business owner that conduct your business out of your home office, every mile you drive on business, there's no first trip, last trip rule that applies to that.